Hello there, this is fairbinaryoptions.com, and the other day we made an analysis on the Great Pound US dollar, and I would like to continue this analysis as I'm still saying that this one is going to go to the downside, so put options will still be the case. Our recommendation yesterday was to buy put options with an expiration date, with end of week expiration date. By the time 53.30, 53.50 comes, and yesterday we had the highs here. If you go, let me go and put the OHLC, let's make it a bit bigger. So the highs yesterday were 1.5343, and therefore the downside should begin. Now, why insisting that this is going to be a contracting triangle? Because if this was supposed to be an impulsive move, the move from here to here, so if this was supposed to be an impulsive move, then all the price action for the so-called third wave to the downside should have stayed below the 0 to 2 trend line. Now, what would be the 0 to 2 trend line? Let's assume that this was the second wave here. Try to draw a trend line from the very beginning of the move, from here to the downside, like this. And wherever you are putting this trend line, either you are putting the, let's say, the 0 to 2, the second wave, the end of the second wave here. If you draw the trend line like this, you see that it is being pierced. Now, such a trend line should not be pierced by any part of the third wave to follow or the first wave. So this is no place for the second wave. How about this point here? Well, if you go and take a trend line again, this is no place for the second wave, as it is pierced yet again. If we go and choose this one here, now this one was our choice basically, or our analysis, unless it would have not been pierced. But yesterday in the 53.30 and 53.50 area we had the piercing. What I'm trying to say is that we have no impulsive move so far, so this can only be a double three running, which is ending almost always with a contracting triangle. And now we know what to look for. If this is supposed to be a contracting triangle, so this is not valid anymore, but if this is supposed to be a contracting triangle for the second wave, we look for A and B, and most likely a C wave again into this area, then to have a D wave all the way to the downside here, A, B, C, D, and the E wave, A, B, C, D, E, and then the end of the second wave. What I'm trying to say is that given or taking into account how long it took for the X wave to the downside to form, but how little time took for the first correction to form, the second correction here will be disproportionate as well when compared with this correction in here. So this one from here to here should be a triangle that should go something like around April or end of March, and then we should see more weakness to come. This let's say consolidation area on the daily chart, remember, on the daily chart, should take something like another 40 candles or stuff like that. So around end of March, beginning of April, we should have the lows to be tested again. Now, this is the ideal contracting triangle in the sense that it's going to be a horizontal one. But if you mark the low in here, let's try to mark the low at the end of the X wave. So if you mark the low in here, it might be that wave A not even to be done yet. It is too early, only 3 candles, and we need something like 4 candles more. So it is too early for wave A. So it might be A, B, and then the C wave to the upside for wave A. So over lower degree. All in all, this should happen on, let's say, next week if you want, or as we are before the NFP, we might have a chance to actually go and buy some call options at the lows here. But here we want still to add to the downside put options with end of day now, expiration date. So let's try put it here, buying put options with end of day expiration day. Thank you very much for being here. This is fairbinaryoption.com, and we are looking at the Great Britain pound US dollar still with bearish highs. Bye bye.